First of all, name change. What are you proposing that you're going to call yourselves?
Yeah, look, Matt, we ran an internal process, and we've come up with a new name, Karora Resources. More importantly, this has been something that we've been working on for a significant amount of time now. Back when I joined the company as CEO, we started saying our strategy will be different. We didn't want to neglect or underestimate that we still have our nickel operation in Quebec. But the fact is, we laid down a strategy and a path, and we said to the market and to the street and our shareholders, we're a gold producer. One of the things we learned as we were marketing is we were being dismissed by some of the larger funds. Actually, some people were looking at registers. I actually went to the Indaba show in Cape Town, and I had two guys walk up to me, man, and they said, look, we presented to you, we had no idea you were a gold company because it comes up as RNC on a ticker or Royal Nickel. So it was a bit of a disadvantage for somebody who doesn't know us. Rebranding has always been part of our strategy. I've been saying now for months, the only thing that hasn't changed is the name. Well, today you see a new name and the same similar focus. So I will say that precise focus that we've had is still going to be maintained and following through with our strategy. So new name, long time coming, exciting, and I'm very happy about it.
Karora Resources. So how are you spelling that? How are you saying that?
Karora, and the ticker is going to be KRR. Now, Matt, look, I don't want to get ahead of myself here. It still needs to get a shareholder approval.
Right, that's going to.
We're announcing this. It's going to be included in our management information circular. It's going to be voted on. Our shareholders have to vote on it. But clearly, we've been hearing a message for some time now from even our shareholders. When are you going to change this name? We're not a base metal. We're a gold company.
Okay, so it's still going to be voted on, but you're saying you've changed everything else in the company. This is the kind of final piece in the jigsaw for you, and you think it'll kind of help people who probably have seen you as a nickel company in the past understand what you are. Okay. Well, good luck with that. I can't wait to see the designs and what that looks like. But it sounds like it's much in demand. The second one, slightly more important to me, because you guys, and I've been saying this for a while, you guys are now throwing off a lot of cash, a lot of free cash here. And it's giving you optionalities, especially since you did that Morgan Stanley renegotiation. I think we talked on Friday about the exploration optionality that you've got and what that could mean, especially joining up a couple of these zones that you're looking at. So great optionality for you, but you've also gone and decided to do something else with your money.
Yeah, look, perfect timing, new name, Karora Resources, a new acquisition. We just signed a definitive agreement on an asset that's about 45 kilometers from our plant. It's a great opportunity for us in the fact that, look, we have an asset that is 45 kilometers from our mill. The grade, Matt, the grade in the resource that they have. Now, look, we signed a definitive agreement. We still got to conduct our final due diligence. But the grades in the resource are higher grade than our underground, our Beta Hunt mine. Now, that excludes the coarse gold. But I'm talking about the average grade. So this provides us a lot more flexibility. In fact, we've got over 130,000 ounces in this resource in Spargos. Spargos is the name of it. That's over 4 grams. So we're talking about an average grade of, say, diluted 3 grams in an open pit. Open pit is cheaper, hands down, mining, than it's going to be underground. We have been saying for months now, we've had a strategy on reducing our costs. How are we going to reduce our costs? We said we're going to focus on 4 things. This clearly demonstrates that behind the scenes, we're fighting for our shareholders, and we're going to create some optionality to feed that mill. We are so much more less reliant on Beta Hunt, and that matters to us, and it matters to our shareholders. If we want to turn on more of Higginsville, and this property here could potentially, look, if we're really aggressive, let's call it Q4, realistically, probably Q1 of 2021. What does that mean? It means that 2021, our plan, once we sign this thing and we execute on this thing, our plan is going to be has the ability to be significantly different than what it is today, where we're not so reliant on Beta Hunt. So at the end of the day, this thing here opens a lot of opportunities for us The grade, never dismiss that grade, that high grade, open pit nearby our plant. You talked about cash, but owning that mill in that district, in that area, really provided us that option. We are the nearest player to that asset. It made a lot of sense for us to acquire this asset.
How much data do you have? I mean, when do you start to understand how much money you're going to be able to make by putting ore from there, Spargos, through your mill?
Yeah, so look, by signing this definitive agreement, we've given ourselves a 90-day exclusivity period. The truth is, this definitive agreement is binding. We've obviously done some work behind the scenes. We're going to refine that work. Our hope is that we could get to site. We want to get to site, and that's why you're seeing a bit longer exclusivity period. For something this size, you wouldn't normally see a 90-day exclusivity period. In fact, think back of Higginsville. I think we closed that in a quicker time frame. The intent here is to give us the time that we need to get to site ourselves and some of our people in Australia, and then drill down on the numbers. But look, let's face it. Last quarter at Beta Hunt, we were, call it 2.6, 2.7 gram. This thing could be 3 gram or higher in an open pit. Open pit costs are cheaper than underground. It's that simple. The average grade of this is higher grade. Gold price is the same. The recoveries, we're going to find that out during our complete due diligence, but initial test work suggests that we're going to get very good recoveries on this. This is really a no-brainer for us and our shareholders, creating flexibility, optionality, and a very good use of some of that cash that we have in hand.